What's up, guys? So Maro is down 5.5% today, and we're going to be taking a look at this on the charts. We were playing this long on this push up to about $30. And if you guys remember, we went over a video talking about the classic market cycle or a classic market bubble. This is broken down into a couple of stages. The first one is going to be the smart money stage, which is where we first start to get this type of impulse between these two ranges. The second is where we get that next push when the public starts to get a hold of it, usually followed by a pullback, which is going to be the bull trap. And then from there, we end up seeing extreme greed happen, where we got this massive pushback up to $31. And then we get that sell-off. You guys can see here that once we hit this top, we'll strike this off on the chart, about $32.08. We end up having this pullback all the way down, bouncing off of support, and coming back up to test this level. Now, those of you who understand order blocks, you will notice that this is an order block. So we do actually come up and test the middle or the mean of that order block before we reject. This here was a perfect put. Like, this would be perfect put situation as we come up into this level, setting a stop loss at a higher high. We did not take the put position, but we did call the top. We saw the sell off back down to $50 or $15. Where we ended up holding. And this was right after the ETF approval news, which was already baked into the price. From here, we pull all the way back down. We start to bounce and hold, and you can see here that it looks like there's a very good chance that we're probably going to see this bounce off of $14, where this order block is, to potentially test this next move. Now, let's talk about why I closed out my position and why I actually didn't hold up to $28. $28 was my main goal, and I closed the rest of my longs out earlier this week. But if we look at this isolated impulse down here first, we're going to take our fib, and we're just going to go from about 29.22 down to this low. If we pull this Fibonacci level out here, you're going to see that this rejection point is right at about $26 to $24. So that's why I was looking to close my profits between this range. There's still a chance that it can push up, but if you trade order blocks, you will know that there is a very high chance that we will probably end up rejecting at about $28. So where does this leave us? I wanted to get puts today, and I just wasn't paying attention. It just wasn't paying attention. I didn't notice that we came up and we tapped 27.80. If so, I would definitely have looked to get puts or to go short here. Now, doesn't mean that this is going to play out the way that we want it to play out. Of course not, right? When you take a position, all you're saying is, just like poker or blackjack, this is my bid, this is what I'm willing to do, this is my requirements, this is how we're going to play the game. See, the market does not make rules for you, which is why everyone fucking fails, because everyone needs to be spoon-fed everything, and they need to be told exactly what to do, when to do it, how the game is played, what are the rules, how do I do this, and then they figure it out for themselves, whereas you're creating your own rules. Like, that's what you're doing in trading. So in this instance, our rule is when we push back up into the block, we're going to take a put position. We don't know what the hell is going to happen, right? Now, where are we going to take profits? Back down inside this block. So somewhere around $15 to $17.50. This is going to be my take profit level. And then where are we going to set our stop loss? This is entirely up to you. Okay. Everyone's like, where do you set stop losses? It's up to you, right? You have to use proper risk management. So you should never be losing more than 10% of your account in a single trade. I would say 5% max, really 3% as you scale. But I know that a lot of people will just jump in too fast and probably not listen to that. But I would highly recommend you understand that, you should never take even a full-on 100% loss of your contract. Shouldn't be more than 5% of your account. There's just no reason to. The next trade is not going to change your fucking life, so there's no reason to act that way. Now, we could say, all right, let's just set a stop loss, maybe on a higher high here. Or we could say, really for me, I'd set the stop loss all the way up at a higher high, push through a block of 32.64. And I would start to buy here, and then I would start to add to my position at 30, add my final bid at 32, and then tag out up at the top. But you can set it based upon percentage. You can set it based on total loss. So maybe you don't want to lose more than $100, whatever it is. If you're actually thinking about risk management, step one, have a much higher chance of not being the 90% that fail. And if you're somebody who's actually saying, hey, no matter what happens, I'm only going to pay $200, $300, $50 to find out if I'm right. I hope this video helps, guys. Let me know what you think is going to happen with Mara down below. If you want to trade with me every day, go check out the second link in the description. I'll see you guys next time. Peace.